Welcome to Invest. We talk about investing, finance, and professional development. So current time of 8:45 a.m. on Eastern Time, Ethereum currently $2,932, down about 0.28% so far. Respect over crypto market and the equity market, on the pre-market perspectives on the Thursday morning, across the board on a future perspective, seems like the 10 years yield is spiking all over again at 2.95%, while oil price is also spiking as well, currently levitating around the $110 per barrel mark. And with respect to the relief rally that went yesterday, it's a very normal type of cadence that we see some sort of relief after the day of post-mortem of the confirmatory signal with respect to what Jerome has mentioned yesterday. Seems like the verbiage from the FOMC meeting conclusion aligns with what we have been expecting for the last 2 weeks so far, knowing the fact that we will be raising the rates from 25 basis point to 50 basis point, but he has no initiative or no intention based on their conclusive committee sentiment on raising the rates to 75 basis point going forward. So technically is a relief, confirming with investor sentiment based on confirmatory signal. But today, we are seeing more of a normalized fashion across the board because of the digestion of the signal and the message. But with respect to something that's kind of counterbalancing it right now at the moment, is coming out from the labor statistics department. It seems like there are some workers' productivity number that came out, capturing the statistics for Q1, obviously for this year. It seems like the output from workers fell by 7.5%, which is technically, if you look at a historical snapshot, the biggest decline since 1947. Obviously, with respect to why has that have been happening, is because of the surging COVID cases, and obviously with respect to higher commodity prices, obviously with respect to increasing interest rates, subsequently drive the consumer and producer's price to go up subsequently, right? So it's just hinder across the board for the labor market, which is coincidentally the mandates that the Fed has, right? So with that digestion, despite the relief rally we had yesterday, it's kind of watered down by the specific statistics that's coming out, right? So it's a double thing, again, normalization, cooling down. Secondly, because of the production statistics that came out for Q1. But these are, again, historical type of affectation. People's try to price in again onto the market, right? So without wasting more time, let's just dive into the technical to see where we at right now in terms of momentum and how we trending right now. Are we still following the pattern that we're talking about? So with respect to recording time, again, 8:48 a.m. on the Eastern Time, we are at the $2,933, down about 0.25%. And you can see clearly we are above the 2,850 level, which is a relatively substantive level, right? The next level we need to get up to as a non-substantive consolidated level will be the 3,000, right? Which is the next level, or $3,005, $8 if you may. But what we need to do is basically get above the $3,000 first, right? Which I believe we should do because of the golden crossway forming. We kind of normalizing depleted on the sideways fashion, right? And we are basically hitting a blockade on the RSIs of 49.9 out of 70, which is normal because 50 is the cross mark that we need to get above to sustain the inertia, the momentum. So what we need to do is get above the 3,000, 3,050, and then getting touched the 3,150, which is a critical level we need to get to. Okay, so it's normal to see what we're seeing right now, but I think because of the lack of negativity in terms of the media affectation and other macro factors that we to be aware of, like we got over the hurdle, right? The earning report came out for most of the corporate companies already. The FOMC meeting has kind of subsided already. The war seems like it's more of a secondary factor. It's still going on, but it's not like the screaming in your face type of factor anymore. COVID is more of a supplementary factor. So we are getting more and more scar tissues and more desensitized with respect to all of these negativity, which if you talk about this like 6 months ago, it will be like, whoa, everything is like falling off the cliff, which we have already fell off the cliff for quite some time. So I do see, similar fashion comparing to what happened in March 14th. But in terms of like, is it going to surge the same fashion that we did? I would say no. I think we are just continue to elongate the trend, right? Forming this zigzag to be gliding on the upward channel. But eventually we will get tighter and tighter and tighter and tighter, which, technically this will basically form an upward wedge, which will translate into a sell-off, in the near future. And again, this is for a hypothetical scenario. Nothing has happened yet, nor do I have the power to predict the future. But this is a possibility that we could actually do that. And I think it also makes sense, right? We need to have this depression stage of kind of cool back down, glide back on a gradual fashion, having the market like normalize it a little bit more until we get to a certain point. And then we have that, disbelief mode that you need to have that one last drop before we have we continue and restart the market cycle back to hopism, optimism, and then euphoria, if you may, right? With respect to Bitcoin, down about 0.5% as well. We are getting blockade at around 40, right? Very logical. You can see that we're also blocking at the 50 out of 70 as well. So it's a relief rally that we saw yesterday, being basically watered down by the worker outputs data again. So if you follow the trend of what we did back in the day on the 14th of March again, we could technically keep going up, and the next level we go up to will be 41,500, and then subsequently 42, which are flat numbers, but real level we need to get up to will be like somewhere around like 44 from here. Ethereum Classic about 4%. You could see that we're bouncing because of the, we were very submerged at the 28 out of 70. We're about to form a golden cross. So again, anywhere from 28 below is still logical DCA, right? Dogecoin anywhere from basically 12 cents below is logical DCA. So right now it's okay. It's kind of cool and flat right now. Cardano down about 4%, right? You can see that 86 cents at the moment. We form a cross section. I think anywhere from basically 75 down is still logical DCA. Solana is above 5% right now. Anywhere from basically 85 to 75 below is still logical. XRP about 3% so far, 69 to 57, right? Again, like same frames. Polkadot's about 5% so far. Anywhere from basically $15 down is still logical. We are relatively oversold at 37 out of 70, but if you bought in at obviously at the $14, that was the perfect dip, right? Because you were extremely submerged, and that about to cross up. So that was like the technical move logically, right? Algorand up about 7%. We are getting blockade exactly where we should be at 70 cents right now. We're at the 50 out of 70, so I probably wouldn't touch this at the moment. I would prefer like when we were at like below 61 cents, right? Shiba Inu is at 2100, so again 2100, 1400 to 900. Those are the frames with DCA, right? MACTAX down about 1.8%, 142 to 120. So we are in between the frames. 41 out of 70 is not terrible to buy this level. AVAX 59 to 50, right? And then lastly for Luna, we are forming a head and shoulder pattern, right? Head, shoulder, and shoulder. So if we crack below 75, we have a long way to go, right? 62, 52 to 45 would be the respective frames, right? So it seems like we are following the pattern, but obviously the relief rally is being pushed down by the Q1 report, right, on the producer productivity index, right? So at the same time, the yield is spiking a little bit. It's now 2.96 instead of 2.95, which we were talking just like 5 minutes ago. So it seems like it's spiking, and also oil is still kind of spiking as well. So definitely have that counterbalance that you're seeing across the spectrum as well. But I think we're still gliding on the same fashion. I don't think it's that's it, because I don't see a lot of negativity coming in the next couple of weeks unless there's some black swan events that happens. So I think we have our marching order in terms of staying within the pattern. But if there's anything crazy that happens, right, let's say something exogenous that I need to be aware of, I'll keep you guys updated on it. But have a good rest of the Thursday, and I appreciate you. Take care. Bye.